Turbo Trading with head trader Robert Knight, MBA.
This is a discussion on the concept of days to cover DTC, and it was brought up in relationship to FFIE. This stock is strong, 4 days up in a row. But look at the strong volume on it today. 82 million shares up 4 days in a row. Came from 220, traded up as high as 650 today. So it's a big short squeeze on it, and let's just talk about that for a second here. We can see this is shortsqueeze.com, and we can see looking at this that it has the days to cover is 7.3 days, and 25.4% of the float is short. So that's huge. It's a huge. I mean, that's 23 million out of 90 million shares to short against on this stock. So what days to cover means is that if only the shorts bought the stock and it traded its average volume, it would take all those shorts 7 days to buy the stock back. That's a theoretical concept because, of course, everybody's trading it. More people will be shorting, people will be covering, but it's a guide to show how, on average, it would take 7 days for them to cover the full amount if everybody wanted to cover their short position. And I've done videos on this before, and what I say is that if there is a catalyst, because that's important, that's what drives the stock. If there is a catalyst and you have 5 days or less than 5 days to cover, then it's not going to have much effect on the price of the stock. There's lots of liquidity. It trades, if a stock has 1 or 2 days to cover, it's trading, huge. It already has lots of liquidity. So a catalyst is not going to force a big short squeeze because there's enough volume in there for those that are short to cover the position. If the days to cover is between 5 and 10, as this is 7.3 with a catalyst, then that's going to have an effect on the price of the stock. People will get squeezed on that. Now, it did trade 82 million yesterday, or today, so far. So that's a lot of stock. But the shorts got squeezed, and as it gets up higher, then the shorts just sell back to the shorts again. But between 5 and 10, you're going to get a big squeeze. If you have a catalyst and you have more than 10 days to cover, that's when I say, let the fireworks begin. That's where you get these huge moves, $10, $20, moves in stocks as shorts scramble to cover because there's no liquidity. There's no stock available for them to cover with. So in this case, FFIE, 7 days to cover, has a significant effect, and on a short squeeze to have the stock trade higher like this. Now it has a total of 90 million shares outstanding, so that's a lot of stock. I mean, this is a $2 move. That's $180 million increase in market cap. It's tripled its market cap in 4 days. So what you'll find is that as the stock moves up like this, as shorts get squeezed, more shorts will come in at a higher price, and they'll be selling basically to the shorts that are covering. That'll be most of your activity. It's because at this level now, the retail buyer is not going to be coming into the market. He's going to be wanting to take profits because it jumped from 2 to 6. So there's obviously going to be some people buying at this level, those with FOMO, but the big market makers and sophisticated traders, they'll be shorting this stock, and they're not going to be buying it because now the short squeeze is done. And that's a lot of stock, 90 million shares, so there's a lot of stock available to trade. But you can see what 7 days to cover with a catalyst does. It gives it a big spike. Not a $20 spike, but $2 and $3 on a $2 stock. That's pretty good.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.